Hello, everyone. This is Martin here again and presenting to you another weekly update on the trading opportunities that are before us. We are rocketing toward the planet called Forex and we're looking for the opportunities between or starting with Monday, February the 29th to March the 4th. Wow, we were really whacked with some heavy snow and blistery cold weather. Hopefully, let's cross our fingers and hope that this is the last of the wintry conditions up here in the Toronto area. And for some of you who are also now watching from further away, so we've had some bad weather. Although throughout the year, throughout the winter season, it's been pretty mild. I'll always take that any day. Now, the theme for this week is strong versus the weak currencies. Now, in your when you're looking at the charts, do you notice which currencies are strong? Do you notice which currencies are moving against which other currencies? And one way, obviously, to tell is through looking at some of the cross pairs, seeing what's going on, and we're going to do that right now. So we're going to take a look, see which pairs are the strongest, which ones most likely are going to have some sort of move this coming week, which ones perhaps won't. But let's start off with the Euro USD. Okay, here we go. This is the Euro USD, and you can see that the Euro, once it peaked right here at about the 130, 130, 132 area, it just kind of plummeted from there and came down, and it seems to be coming down, and obviously it's showing its weakness against the USD. Now this is the daily chart, so you can see what's happened. This pair actually presented some pretty good trading opportunities, and but the interesting thing, the opportunity presented in the counter trend position style of trading. And let me just explain here, starting at the left side right here, we see price going higher, higher, higher. So obviously we're in an uptrend right here. Price is coming back to the 21, falling back to the 21. And you notice that the 21 and the 8 EMA is above the 50. That's this dark blue line. So not only is it above the 50, but we're converging here with the 100 SMA as well. So where the Euro USD was caught in a channel contained within the upper trend line here, the lower trend line right there, and you can see basically prices come back down, and this is the danger part. Once price comes down, we are in a counter trend, and I did mention last week that this area right here, you see the red arrow right there, just under there. If you would have taken a sell stop trade last week, you would have made some really good pips from there all the way down to here. That's called an aggressive sell stop, just below the previous bars of the previous candles there. Okay, and you would have made uh, 70 to 120 pips depending on where you would have gotten out. Okay, now the conservative entry would have been waiting for this candle to close right there. That's a long bearish candle, and usually after a long candle closes, there's a bit of a pause in the market. The bulls are fighting aggressively with the bears, and the price never really went anywhere on this particular day. However, after this candle, if you would have gotten in at the open of this next candle, this small little doji right here, you still would have made some good pips if you would have held on to the trade for at least 1, 2, 3 more days, 1, 2, 3 days, and you would have ended up down here. So either way, the aggressive sell stop right here, okay, or the waiting for confirmation and getting in at the open of the next candle. And the reason you could possibly have done that is because of this support zone price with this candle broke support. It's also an aggressive bearish confident candle, so I still would have gotten in even on a conservative level right there and would have written it down. Okay, so now, this week, I see that because prices come down below the 50, just caution. And why do I say caution? Because price may come back up. Remember, If we want to really take sell trades to the downside, you kind of have to wait till the moving averages catch up. In other words, here's the 21. This is the main one. This is the 8 and the 21. They've got to come down below the 50 and below the 100 to have confidence that the downtrend or this new downtrend will continue to the downside. I believe it will, but I believe right now price is kind of going to go sideways, maybe go up a little bit higher. The moving averages are going to come down, and what you can do is wait for a sell opportunity, either wait for a pullback or here's a great idea. See that it's this arrow right here? Take a sell stop order right there. So we're looking we're playing the breakout here, and that's approximately the 108, 80, 85, 90 area. But I probably place a sell stop at the 108.80 level. Okay, so there you go. That's what I see for the Euro USD. So again, this week's theme: the Euro is very weak against the US dollar. Okay. Now we've got the British pound. You can see the British pound is just plummeted. The big news for last week was the gap. The gap from this was the close on Friday, the previous week, and you see it open below. It did go up a bit to kind of close the gap a bit, but then just plummeted 3 more days in a row, and then finally on Friday just dropped even further. So yes, I believe the price is going to go down. We are reaching the 2008 low, which is somewhere around this area right here. Okay, 137.50. Mm, let's see. I think I've got that wrong. Just a second. Okay, I've adjusted the price here, so I believe price will come down all the way and retest the 2008 low. And if you want to take a look, minimize your screen here. Just put it on the monthly, and you can see. Just a second here. Okay, you can see the lows right here. This is 2000 August 2008 low. Okay, so that's what's happening on this currency pair. Okay, and last week we waited for a breakout. That did happen. I did have an arrow right here. Um, or like I'm sorry, I believe it was this blue line right here, and it broke down to the downside. If you would have entered a sell stop there, you actually that would have been good for 200 to 275 pips. This would have been one of your best trades of last week. Okay, so this week, again, I would look at sell opportunities. Perhaps if you want to take a sell trade right now, but it may, with the Sunday Monday opening for this trading week, price may just plummet another 60, 70, 80 pips further before coming back up. So if you want, or take a sell stop about 10, 15 pips below the low of this candle, okay, and that's what you can do there. So the next pair is the Australian USD, and this one you can see last week it just completely reversed. I mean, it went sideways, and I said last week, wait for the triangle breakout. Here's the triangle. It did finally break out with this bullish white candle. Okay, so at the beginning of the trading week last week, finally it did break up, went down, down, up, and hit the resistance area right here. And I did mention if you just wait for a breakout above this green arrow and or above this arrow, above the green arrow and the gray rectangle. But on Friday's close, it just plummeted right back down. So this week we're going sideways. I would just wait and see. Right now, price is still above the 21. It's above the 50, but price is going to go sideways. And so this week, what you want to do is wait for price to break the high right here at the bottom of this arrow, or break the around the top of this arrow to the downside. Okay, you kind of just want to wait and see. Okay, next one we've got the New Zealand USD, and you can see it actually mirrored the Australian USD dollar. Exact same thing. Price kind of even went more sideways up and then just completely right down. So even though it's a bearish engulfing candle, you really have to watch out because we are at an area of confluence where all the moving averages are coming together. Okay, so you can see we've got the 50, we've got the 21, we've got the triangle right here. And if we want to adjust that for this week, you could do this. Okay, so price is still going to go sideways. We kind of have to wait till price breaks the bottom of this green arrow right here, or breaks the or at least breaks the top. I'm sorry, the top of this red arrow here to the downside. So again, it's going to go sideways. Just wait and see. And even though the candle broke, I just want to mention one thing. There was no trade, even though this was a good bullish move. But because of this up, down, up, down, up, down, and up again, we did not initiate another trade, even though this was kind of a bullish confident candle. Why, everyone? And the reason is because we are hitting major resistance. So if you would have taken a trade right there, you can see on Friday you would have come right down and lost big time. Okay, or you would have been stopped out. But still, you have to watch this when price is approaching resistance. In this case, you do not want to take a buy trade. You want to just wait and see what happens. Okay. Next, we've got the USD CAD. Here's a great example of the Canadian strength. So this is the USD CAD. So when the USD is this pair, when this pair is coming down, that means the Canadian dollar is getting stronger, much stronger, and that showed last week. Now, the driver of the Canadian currency is obviously the oil. Let me just quickly switch to that. So, oil has been on the upswing from this bottom right here. You can see it's actually gone up quite a bit and hit a high of approximately, let's take a look, 34.53. Okay, take a look on the right side there. And this is a major resistance area, okay? So that's why it's come right back down with a bearish doji, I'm sorry, bit doji and a pin bar, okay? So back to the US CAD. I see this pair going down further. We've broken a long trend line. This is a medium trend line, and this is the long-term trend line right here. If you go back, I'll just minimize it. Okay, you can see it's a long-term trend line. Okay, let me zoom that back in again. So I believe price is going to keep going down. If you want, I would wait. Price may go up. It may be a little bit volatile, but 15, let me just take a look here. At the 134.60 area, placing a sell stop and catching the breakout of that price down to the downside. Last week, which was pretty interesting, um, I said we were in a weak downtrend, and it actually went sideways. Here is the start of the trading week last week. So 1, 2, 3, 4 days, it actually went nowhere. And the only time it showed its hand was on Friday, where the U.S. currency just weakened and dropped like a stone. Um, if you would have gotten in right about there, and I did have this arrow up. You see this black candle is almost covering this red arrow. If you because I said, I believe in last week's video, taking a sell stop right at that point there, you would have made some pretty good pips, about 20 pips on this trade. Okay, so far, uh, along with this week's theme, we're seeing that the Canadian currency is strong and the British pound currency is weak. Okay, again, real quickly, back to the oil. We are in a weak counter trend. And the reason is we don't really want to take a trade right now. Price is above the 21. However, the 21 is below the 50, right? So if price is heading high, slightly higher, um, the moving averages are not in the right way. That the 21 the 21 and the 8, they have to be above the 50 for us to even consider a buy trade. So in this case, if you are playing the oil and you're taking trades on this currency, then what you can do is wait till price hits this area right here before taking a buy trade. Then you would have room for price to go up to at least here, about 100. Well, actually, not a lot. There's 18 points there. So, or waiting for price to come down to here. But that's still that's what you have to do. You just kind of wait and see until this plays out. Price may come back down again. It may go sideways for a while. It may even break this upward trend line and come right back down again. Okay, so we are consolidating. You see, price is really going up and down between this large resistance area right here and this other support area in the gray rectangle there. So again, wait and see. Price may come down, and then as the moving averages catch up and end up above the 50, you could start looking at buy trade. The US Swiss franc not really going anywhere. You can see as of the start of the trading week last week, up, down, down, slightly up again. So really didn't go anywhere. I did say that we were in a downtrend continuation. Well, we were starting here. If you look at the left side, we're in a downtrend, counter trend. We're still kind of in the counter trend, but it's not going anywhere. There's no trade even after this big white candle. This was the Sunday, Monday open. Again, as in another pair I mentioned, even though this was a great candle, engulfing candle, we did hit the resistance area right there. So no real trade. And again, luckily we didn't because price went down the next day. So that's what I see here. And this week, again, it's just sideways. Wait for something to happen. You want to wait for price to come down to at least there, or price to at least above here. Okay. And finally, for the major pairs, the U.S. and Japanese. Here, the U.S. is showing its strength against Japanese pair. So I believe this pair is going to be going higher. Um, and we're going to at least get up to this area right here and then watch for bounce, whether it go down or whether it go up. But here's a good, strong, confident candle. Even though we're in a downtrend, this is what's called a counter trend. Just caution. Remember, again, caution. The reason is price overall is below the 50, is below the 21, and below and just gotten above the 8, right? So this is a counter trend. The overall trend is down, right? Overall, we are heading down, okay? So we're looking for a price to go up a little bit higher, and then we can look at a bounce area right there. Price may even go all the way up to and retest a 2015 low. I don't know. Okay, so again, wait and see. Downtrend, caution, counter trend, caution. Okay, last week though was great uh, for playing this currency pair. I said sell on a pullback. It did. This was the open right here. This is the Friday close of the previous week. Sunday, Monday open here. It went up higher and it went up higher and right there. If you would have taken let's see, a sell stop just below this bullish candle right there, you would have gotten some pretty good pips, at least for about 90, 100 pips. So that's what we mean by a counter trend. Let me switch that to a 4-hour chart, see if there was an opportunity. Starting with last week, so price went up right there on a 4-hour chart. Price bounced down. Yeah, so the opportunity was there on a 4-hour chart. Here is the see, price went up, touched the moving averages. The next one's kind of an engulfing, another engulfing. Two black bearish candles in a row. I would have gone in at the right there below this candle, um, getting in right there. If you would have stayed up to watch the computer at that time, you would have made then, well, 150 pips. Okay, so right now, let's switch back to the daily chart. Prices just bounced off the major support right here, and the MACD is still below zero, so just be careful here. If you want to get in, this is the next major area of resistance right there, where you might want to target your profit. Okay, and in this case, your stop loss would be just below this white candle, right below the wick of that candle right there. Okay. Now, again, along with the theme, which currencies are strong this week, which currencies are weak? Well, let's look at a cross pair, and we already ascertained that Canadian dollars seem to be getting stronger. Let's look at the Canadian Japanese yen. There we go. Canadian dollar versus the Japanese yen. Okay, Canadian dollar is up, and here, if you want to just wait for a bit of a pullback and then look for bullish opportunities to the upside. Okay, and the only thing is, again, the moving averages are below the 50. Again, remember for currency pairs in a trend, we want to wait for the faster moving averages, such as the 8 or the 21, to be above the 50 before we could consider long trades or bullish trades to the upside. But in this case, you want to maybe just wait. I would not trade Sunday, Monday open, just kind of wait, okay, to see what happens. But again, there's an indication that the Canadian currency is a lot stronger than Japanese. Let's take a look at the another cross pair, the euro Canadian dollar. Well, there you go. So taking a look at this, you can see prices come down, 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 and seems to be going all the way down here. And let me just take a look at something. Here is a longer term trend line. I'll extend that. Okay, let's go back to the daily chart. Let's zoom in a bit. There we go. Okay, so you see, I believe price is going to be coming back down. Okay, and that's what I see there. So these notes might be from the week before. I just want to delete these. Okay, so I don't want you to get the wrong information. That could have been from the week before. Okay, so again, you see, this is important. Do you see the 100 SMA right here with this dashed line? So I believe price could certainly come right back up to retest the support of the 100 SMA. As prices going up or sideways, these moving averages are coming down, which is what we want to see, because now the 8 and the 21 are below the 50 with this dark blue line. This is exactly what we want to see. And let me just move that out of the way. And also here is another, I want to move this out of the way. Here is the previous support. So you can see price has broken support. Price has now broken the 100. But what you want to do really in an ideal situation is wait for pullback, then look for bearish opportunity to the downside. So you're waiting for price to come up and then waiting for price to come back down, right? Or aggressive traders would do this: take a sell stop order just below the wick of this black bearish candle, okay? And if this is at, let's say, approximately the 147.68, so around the 147.50, 147.45, taking a sell stop there, then catching the breakout to the downside once it's done its thing sideways, and hopefully catching it to at least make pretty good in this case, making at least 180 to 120 pips to the downside. Okay, again, your stop loss would be just above the black well, this black bearish candle right here, but above the wick. right there. So your stop loss would be there, and this is what we're looking for. So when we talk about 1-to-1 ratio, I'm going to do something else for you right now, okay? I'm going to draw in, okay, I'm going to draw in some rectangles. Okay. So let me just color that red. Okay. Okay. So there's your risk. Okay. If you get in, let's say you're getting in right there. Okay. Right there. And that, for at least a 1-to-1, then you want to take your profit at least down here. Okay. Let me just color that in. Okay. So here's your risk. Okay, in this case, it would be actually not as far as that, about there. And you're getting in right here, so your risk is at around 271 pips. Now, mind you, this is a daily chart. Sounds like a lot, but this is a cross pairs. 271, and your profit, you're targeting at least 1-to-1. Okay, so your profit would be 271, which is right about there, 290. So there's lots of room there. I would always get out a little bit before the 1-to-1. So instead of waiting for price to come all the way down here, get out somewhere around about 90% of the average true range, right about there. Okay, so if you get in here, your target should be at least to there. Your risk would be there, but once you're in profit and prices coming down further, then move your stop down lower to at least to break even. Okay, so that's just a little bit of a risk to reward lesson there for you. And I think that's about it. I think that was the last pair I wanted to cover, the Euro CAD. So again, just really quickly, the strongest pairs this week or last week, ending with last week, were the Canadian dollar and the USD. And the weakest were the euro and the British pound. See, this is the Euro CAD. So the euro is dropping against the Canadian dollar, which means the Canadian dollar is stronger because it's the opposite currency. So again, the weak currencies that you want to look at for this week for any trading opportunities are the euro and the British pound, and the strongest ones are the Canadian dollar and the USD. Hopefully, all this information helps you. I'm looking forward to your questions. If you have any, please email me anytime. And happy trading, and hopefully, you can make some pips this week. So take care. Bye for now.